This episode of the Old Dogs REI Network is brought to you by Mino Studio.
In a world where jobs are how most people make money, one man, one desire, one challenge dares to break the mold. Welcome to the Old Dogs REI Network, where we don't work for money. Money works for us. Coming soon. Viewer discretion advised.
Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manacero.
Welcome to the Old Dogs REI Network. I'm your host, Bill Manacero, and this is the show where 50-plussers and anyone else who wants to join us get solid, no sales pitch real estate investing advice to help generate real cash flow. This podcast airs twice weekly on Mondays and Fridays, and if you aren't already a subscriber, go to iTunes or Apple Podcasts, type in Old Dogs, spelled D-A-W-G-S, find our podcast, and subscribe. Well, we have a great show for you today. We have a returning guest here, a great guy who has just kicked it in real estate investing. He is also in a lot of other spaces besides what we consider just standard real estate investing, and he's going to be talking about that specifically, but definitely want to hear about what he's doing in the real estate side, as well as some other areas that are very, very fascinating. And I'm talking about Dave Zook. Dave is a successful business owner, syndicator, and investment and tax strategist. He has acquired more than $200 million of real estate since 2010, which includes several thousand multifamily apartment units, multiple large institutional-grade self-storage facilities, and cleaner energy carbon distillation units, which produce pharmaceutical-grade oil and liquids. We're going to be hearing about that too. His team is also one of the top 5 ATM fund operators in the country. We're talking about automatic teller machines. And Dave and his wife, Susan, along with their 4 children, live in beautiful Lancaster, PA. So Dave, welcome back to the Old Dogs REI Network.
Bill, thanks for having me back on your show. I appreciate it.
Oh, it's great. Dave, you got a great story. I'm real excited to get an update. It's been 3 years, 4 years, or more? It's 18. Yeah, like almost 4 years. So a long time since you've been on. So I'm definitely been seeing your name around a lot on deals and doing different speaking at various conferences and so forth. You're still active and doing a lot of different things out there, but maybe you can just give us just a little rundown of what you've been doing the last few years.
Yeah, so a lot has happened in the last couple of years since we last talked, and it's been a fun ride. It's been just things change, times change, and back when we last talked, three plus years ago, if you would have told us what all was going to happen between then and now, it's one of those things where we may have not been able to handle it, to fathom it, but it's all good. And you just got to take it one day at a time and do your thing. Work hard, surround yourself with good people, and just go out there and do good business.
Well, it looks like you've definitely done that. One thing that is very interesting is just the diversity of the different things that you're involved with. It's funny. I think probably when you started in this business, you weren't necessarily considering yourself a tax strategist, but now you are, and you learned right, sort of the hard way, like a lot of us end up learning. I want to hear a little bit about that as well. Yeah, I don't know where to begin here. You've obviously you were heavy into multifamily when I talked to you, but you have definitely expanded out. What areas you've been going into?
Yeah, so back when we last talked, I started accumulating multifamily apartments back in 2000, around 2010, and I bought my very last one in 2008, in the fall of 2018. And back in those days, there was a lot of low-hanging fruit. I'm sure there's still opportunities out there in the marketplace today, but there certainly isn't as much low-hanging fruit as there was back, in 2010 to 18. So I transitioned. I was looking for an asset class and had long been interested in the self-storage space. One of the reasons that I became so interested in the self-storage space was in 2016, I felt like we were closer to the top than the bottom or even the middle of the bull run. So I started looking for something for an asset class that would do really well in a pullback or recession, or, when things weren't as rosy as they were, in those days. I found a really good self-storage operator and partnered with him. And, over the last couple of years, we've done probably 17 or 18 different deals together, institutional grade self-storage facilities. And I love the asset class. I love the stability. I love how it performs in times of disruption. And I love the team. So it's been a fun ride, and we've built up quite a portfolio of really good quality self-storage assets.
Yeah, that is a hot area right now. I'll tell you, I've been hearing more and more from people that just right now, I'd say it's sort of moving up the food chain here in terms of real estate related industries to get involved in, definitely. But you are really more I would just say sort of almost like a serial entrepreneur, because you're in a lot of different businesses. And I think when I first talked to you, I think there's a family business, Zook cabins, and which are, amazing. These, just kits, right? That are basically shipped out to different people that you can build a simple little 1-bedroom up to, an elaborate, mansion. And that was, obviously, your involvement was, I don't know how involved you were at that time, but you also have been in these other different areas. Maybe you could just kind of touch on some of the other areas. You mentioned or it mentions in your bio about ATMs and the cold distillation. And I understand you also have an industrial office park too. Maybe you could touch a little bit on each one.
Yeah. So you mentioned briefly about our modular building business, and that's our family business, and we've really done well in that business and have grown that business a lot. We've branched out. I started my career not in real estate investing, but more in investing in businesses. And I founded a couple. I founded a couple. I partnered with some folks. So I found myself very connected in the business world and owned a couple of businesses. And I really got into the real estate because I got myself in a position where I had a tax problem about a decade ago. I ended up with a $500,000 tax bill.
Ouch.
And so I was, I remember where I was standing when I got the call that I had to pay, several $100,000 in tax to the IRS in 2 days. It was like April 13th. And, I just got tired of that. And, I was having a really good time running my business and didn't even feel like work. It was so much fun. But when I had to turn around and give half of my profits back to the government, it just wasn't so much fun anymore. So I got into the multifamily apartment space, primarily from a tax angle. I needed to protect my income from being taxed, and got myself in a position where I went from paying $500,000 of tax a year to paying 0 to 3% ever since, all while, amplifying and, a couple times Xing over the income that I had been making back then. And so that took me down that trail of investing. And then I made a couple different transitions, and I've invested in a number of different asset classes in the last 20 years. And what happens is you start investing in an asset class, and you get to, some of them fall by the wayside, some of them are not the kind that you want to continue doing, and sometimes I'll intentionally make a small investment into a certain asset class with an operator to, kind of test the waters, make sure I like working with the team, make sure I like the asset class. And, obviously I do a lot of due diligence into the asset class before I get into it. But that led me down the path where I got introduced to a group that was investing in ATM machines, and they were the operators, and invested with them a number of different times over a couple years, and started investing with them in 2012. And then as I was building my syndication career, my multifamily portfolios and all, they saw what I was doing. And at one point in time, they said, "Hey, we just signed a large portfolio of ATM machines. We just signed a contract. Could you help? Could you come help us?" And at that point, I teamed up with him. I became a partner in the firm, and we've really grown the business a lot. And we gotten into a position where we took it from sort of being a family and friends small fund to now being one of the top 5 ATM operators in the country.
Wow. That, and you would think too, with ATMs, I kind of think of almost like phone booths, but because everything's electronic, but you still need cash, right? And so there are limited places besides a bank. I mean, I guess you can go to the supermarket and get cash back and that kind of thing. But so you're still finding a strong demand for the ATMs.
Yeah, well, back in 2012, Venmo, Cash App, I don't even know if some of those technologies were even born yet, but you had, Google, Apple Pay, Google Wallet, some of those things were kind of coming onto the scene. You had, a number of different electronic payment options back then. And of course, everybody's talking about, cash, it's got a limited lifetime, and, cash is going away and all that. Well, that was, that was almost 10 years ago, and there's more cash in circulation. In fact, there's almost twice as much cash in circulation now than there was back then.
Really? Wow.
The use of cash has not only held stable, it's gone up a lot over the last decade, and the use of ATMs has gone up a lot over the last decade. So we do a lot of market research, just in general, obviously. But even more telling is the research that we can do right inside our own funds. And we can see exactly what people are doing and how they're transacting and all that. And when you couple the fact that, there's twice as much currency in circulation now than there was 10 years ago, and the group that we serve, the demographic that we serve, is one of the fastest growing demographics in the country, you start to understand why this is such a viable investment play even today. And our peer group has long since transitioned out of cash, and we've gone to plastic. But there is a large percentage of the population that's unbanked, underbanked, EBT card carriers. We serve that lower income and that's our customer. So when you understand who the customer is and who that demographic is that we serve, it becomes a little easier to understand.
Well, that's great. That's great. Well, you refer to things I noticed in your website and so forth there as real assets. So could you define what a real asset would be as opposed to other types of assets?
Yeah, so often it's you're comparing to paper assets. When you say real assets, what's the difference between, what makes a real asset, special? And that is when you can walk up to it, kick it, feel it, touch it. It's a real thing. It's not a paper asset. It's not a coupon that gives you a share of some kind of a company. It's not a derivative of some kind of a company or a derivative of a derivative. It's real. It's real, and it adds value to the customers that you serve. It's think about well, let me back up a second. ATM, often I hear, like, Dave, he's a real estate investor and he's also an ATM investor. Well, ATM investing at its simplest form is a real estate play. So think about this. When you take a 10-acre parcel of property and you build a multifamily apartment building or a self-storage facility on it, you're monetizing that 10-acre piece of property. You're getting it to maybe its highest and best use for that area. When you're investing in ATMs, you're monetizing a 3-foot by 3-foot, highly coveted, highly trafficked piece of real estate. In fact, it might be the highest per square inch real estate play than you've ever seen. So it is a real estate play. You're really just monetizing. The ATM is a box that's extracting the value in that 3-foot by 3-foot piece of real estate.
That's fascinating. And do you have sort of a prime market for ATMs? What would you describe as that prime real estate for an ATM machine?
A busy street corner, let's call it a deli or a convenience store, high foot traffic, that's in a lower income sort of neighborhood. I mean, here's the other thing. Normally, let's say 15 years ago, you had a middle-aged person, guy, girl, going to work, working in a factory. Friday night, he'd get a check. He'd go to the bank, he'd put that check in the bank and get some cash out to hold him over the week. That doesn't happen anymore. Now it's all ACH. People don't use checks to pay pay for their employees. They ACH it right straight into their account. So now, what do you think? Do you think somebody wants to walk out of their C-class multifamily apartment and drive their car or take the bus, 3 miles down the road or 2 miles down the road to the closest bank and then stand in line to get cash? No, the ATM machine becomes their bank. So it's a form of a mobile bank. And as you see banks sort of transitioning and embracing, less brick and mortar and more technology based, it falls right into that sort of business model.
Yeah, that's true. And they're cutting down their number of branches, a lot of the big ones. I see a lot of that. But they're also, like you said, there has to be that source of cash, and they're going to go for what's convenient. That's awesome. Well, what about some of these other areas that you're in as well? Can you give us a little overview in that?
Yeah. So our core asset classes right now is self-storage, ATMs, and then we have a carbon project that we've been involved in for going on 4 years now. What we do is we take coal and we run it through a patented, domestically and internationally, a patented giant oven. It's called a distillation unit. And we take that coal and run it through that oven that goes up to 2,000 degrees. And we agitate the coal through there at slow speeds and high heat. And at some point in that process, the coal starts to break down and it releases oil, gas, and liquid that we sell to Exxon under contract. And so it allows you to get the same sort of tax treatment, actually better tax treatment. You get 100% bonus depreciation in year one that will offset ordinary income using IRS code 469. So it's really a way for you to invest in, let's say, the energy space, get 100% bonus depreciation, use it to offset ordinary income with a fraction of the risk. And the reason there's only a fraction of the risk is simply because you're not taking on drilling or the up and down swings, the price volatility. So in my opinions, two of your biggest risks in the oil and gas space, in the drilling space, is your drilling risk and price volatility. Here you're getting rid of both of those because you're selling under contract and you're not drilling for oil. So we're creating a pharmaceutical grade or a medical grade oil, and we're selling it to, big name, household name buyers, and we're selling it under contract at $182.50 a barrel.
Unbelievable. Wow. And it's not like a refinery. I mean, it seems like it's a much more compact operation than you'd see, like an oil refinery.
Well, yeah. So what we do is we produce the oil and liquids, and then we sell it, and it gets shipped from our facility. It gets shipped to a refinery, and then they break out. There could be you give them a gallon of oil, and they could break it apart in 10 or 15 different subsets of that oil and get the different chemicals and ingredients out of that oil that will go into drugs and vaccines and all kinds of medical solutions. Most of the time when you get a needle stuck into you at the hospital and you're taking on some form of drug, it's coal-based.
Interesting.
And when you use skincare, coal-based, cosmetics, coal-based. Everything, all those skin related creams and lotions, coal-based.
Interesting. Wow. I had no idea. That's amazing. Where's this, you have a lot of, a lot of hands in different pots here. Where is your primary focus right now in terms of the economy, where the best opportunities seem to lie?
So, again, we're involved in three of our core asset classes, and that is self-storage, ATMs, and the carbon project I just explained. So it's those three asset classes, and for me, it depends. It has to do with what I need as an investor. So if I'm getting down to the back end of the last half of the year, and I see that I've got a potential tax problem, I'm looking at two things. I'm looking at, okay, I've got so much passive income, or I've got so much ordinary income. How do I protect myself from the tax liability on that income? And now I've got to take an investment. I got to find an investment or an asset class that will offset, that will give me the depreciation to offset both of those kinds of income. And so the answer is not always the same. It depends on what I need. It's the same as when an investor comes to me and he's telling me his tax issues, and it's my job to then figure out, okay, how can I help? What does that customer need? What does that investor need? Does he just want additional streams of income to supplement, his job, or does he have, did he sell something, or did he have a whole boatload of ordinary income and he needs some protection on that side? So you really got to fit up, you got to fit the asset class to your specific need and let it do its job. If an investor comes to me and say, I'm looking to put my money somewhere safe, don't really need the cash flow, I got a really good job or I got a really good business, but I'm looking to, make it, make it come back with friends, compound and get a good return on my investment longer term. Self-storage can be a great one for that. But if somebody comes to me and says, man, I need monthly cash flow and I need a tax I need a big tax break before the end of the year. That's a totally different asset class. That would be more along the lines of ATMs or our carbon project. So I always try to figure out what's the need, and then what asset can I use? What asset can I leverage to get me what I need?
Right. Would you consider yourself an angel investor?
No. I've done some of that, a little bit of that. I mean, normally what I do is I will take a small portion of my income or net worth, and I will invest it into, you know, something that has the potential to just, blow the lid off of just really take Bitcoin, for instance.
Right.
I've invested in crypto, but it was always, with money that I could afford to lose. It was always with that percent, with those couple percent of income that I allocated it toward, something that could make some real life-changing gains. And so that's how I look at any of those sort of startup or pre-IPO or angel investing and that kind of thing. Do it with money that you're not, that if you lose it, you'll be okay.
Gotcha. So you're more working with maybe a fixed investment fund, or that you like to move into different areas, as opposed to hearing from entrepreneurs that have this new product or this new what have you. You wouldn't be a Shark Tank participant or something, right?
It doesn't mean that I would never invest in one of those things, but I would never go to market and get my investors involved in those kinds of things, because it's, to me, I'm not only responsible for my money, I'm responsible for theirs. And so to me, that's something I'll do on my own on the side with money that, if I lose it all, it's okay. It's not going to change my standard of living.
Right. Now, it's fascinating. We really have diversified quite a bit, since the last time I talked to you. What kind of a yield are you generally looking for in an investment? And I know that's always a tough question, but is there a certain base that you're just not going to look anything below that particular yield?
So that's a little bit tricky, because when you compare asset classes with a couple different asset classes that I just mentioned, it's all over the board, because our self-storage fund, it's a value add fund, so it's not designed to give a ton of cash flow during the hold. It's designed to force equity. And so I usually, in that sense, you got to look at your different asset class and compare IRRs. What's this look like so what is the difference in the IRR from a self-storage investment that I would sell in 7 years? And that's how I compare it, because ATMs are set up on a 7-year contract. So now when you compare IRRs, it kind of gives you the whole picture between the asset classes. And it allows you kind of to get the total return, not just the cash on cash return. So I look at IRRs, and hey, if you can get me into the teens, we're still good. I mean, that's it gets harder to find really good quality assets in the last couple of years, but an IRR into the teens is still good. That's still a good return.
Now, did you sell all your multifamily, or are you still hold on to some multifamily apartments?
We are selling. In fact, we sold one last week, and I expect to sell another one next week. So we've been selling over the last 2 years.
That's a great time to sell. Definitely a good time to sell.
Yeah.
Wow. And this industrial office park that you have, is that just that's one of your real estate investments? Is that an area you may focus more on? Because I know industrial is pretty hot right now.
No, that's not a space that I'm looking at right now, that was a property that we bought, I think, back in 16 or 17. And it was, we bought it for a good price. We bought it in an area where we were doing a lot of multifamily investing, multifamily apartment investing, and it was a good fit at the time. So, but no, I am not looking to expand into office space.
Okay, great. Our audience, are folks that are 50 years of age and older. They either have a nest egg that they want to invest in the right places to get the right returns, so that they can sustain their retirement and the lifestyle that they want. And then there's others that are looking for things to get a little bit more involved in, a little more, maybe less passive. You have a good broad knowledge here. You've been in the multifamily space. So you've been in these other areas. What kind of advice would you have for those folks? I know I'm talking about two different groups, one that, might actually buy assets, another that would invest in assets. But what kind of advice you'd have looking at today's economy, and maybe even your projection of where things are going to go in the next year or so?
One of the things that's a little tricky today is, you try and plan out, 3-5 years in the future and see, when you look at past booms and busts, when you look at, recessions and corrections in the market, it seems like we would be, in many of these asset classes, it would seem like, you'd be due for some kind of a cool-off period. But then you got to look at, okay, well, there's a couple trillion new dollars in the market floating around there out in the market, and those new dollars are going to be looking for yield. So we could have a couple years of inflated asset prices in front of me. It wouldn't surprise me. But it's hard to tell because we're really not being run on fundamentals anymore. Some of your analysis you got to do based on the amount of dollars that are out there looking for yield.
What would you recommend? Let's say a friend of yours to say, hey, I've got some money, I want to put it away, and looking at getting not only a good yield but maybe some tax advantages too.
I think it has to do with the amount of risk that you're willing to take. That's going to be different from one person to the next. If it's an asset class that it's going to, that you're nervous about, it's going to keep you up at night, it's not worth it. But look, we're always going to need housing. If you can get into providing housing for people, you're always going to need housing. Another niche that I'm very interested in and that I'm actively involved in is Airbnb, short-term rentals.
Oh, really?
We've actually been pretty active in that in the last few years, and expect to be more active going forward. So providing housing for people is not a bad thing. If you can get in the right areas, you can get into the path of progress. Self-storage. I like self-storage. I really like self-storage. ATMs, me personally, I understand them. I understand the demographic that we're serving. My money is going to ATMs. Been investing for ATMs every year for a long time, and I expect to in the future until the tides change, or until I start feeling like we're getting down to where we might see an increase. To where we might see a decrease in the use of cash, but we're not seeing anything in the marketplace. We're not seeing anything that would point in that direction. So it has to do with the person's risk level, but those are a couple that I'm very interested in, very active in.
Yeah, great. Well, sound like great areas. You also mentioned your, investment in tax strategist. Now, I know you mentioned how you became that. It was really out of necessity. But are you actively, offering advice to people and helping people to, sort of avoid those same situation that you faced?
my own investors who, let's say it's a successful business person who had some kind of liquidity event, maybe sold an apartment building or maybe sold his practice or his business. Well, he's been actively involved in his business for maybe a couple decades. And oftentimes that business owner has been so busy doing his thing, running his business, he's not, oftentimes I'm seeing that, many of those folks aren't really educated on the tax law, on the tax side of things. And so I like to come alongside those guys and kind of help them, guide them through that process and get them to the point where they can go ahead and do that sale and have that liquidity event without getting killed on their taxes. And many times that I'm involved with them before the sale, through the sale, and after the sale. And we've had some really, I could tell you some pretty cool stories about how we took, 7-figure tax bills down into the, a couple hundred or a couple $1,000s. It's a lot of fun.
Unbelievable. That's great. That's great. Well, Dave, this has been great having you back on, and just amazing what you're involved with. I'm sure there's folks that are listening that would like to find out more about you and maybe some of these investments that you have available. What's sort of the best way for folks to find that information out?
Sure, and you can get a report on each one of those asset classes. I've written them. I'd be happy to send them to your folks. You can go to our website. They can go to our website at therealassetinvestor.com, or they can send an email to info@therealassetinvestor.com, and either myself or one of my team will respond.
God, that's great. That's great. Wow. Well, thanks so much, Dave, for being on and just sharing what you've been up to, and some great information there for our audience for sure.
Well, thanks for having me back on your show, Bill. It was fun.
Oh yeah, no, it's great having you. We do have this tradition though, that we have our guests close us out with we're called the old dogs, right? So we had this, if you could just give us your closing hound dog howl here, just to close us out.
All right, you ready?
I'm ready.
Oh!
All right. That sounds like a hound dog owner there. All right. Well, Dave, thank you so much. This has been a blast, and real good information.
All right. Thanks for having me, Bill.
No problem. I also want to thank all our old dog listeners out there too for joining us. I know there's a lot of other things you could be doing right now, but the fact that you've taken the time to join us means a lot, and we really appreciate it. Please note everything that Dave talked about today will be presented in detail, and there'll be links and all kinds of stuff there on each of those areas he discussed today in our show notes at the olddogsreinetwork.com/blog, and you're going to look for the episode with Dave Zook. Well, that's the show for today. Remember, cash flow is king and real estate investing the means. Until next time, keep moving forward, and may God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.